Time now for an in-depth look at the market action today, and for that I'm joined on the line by Dr. Kim Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, thank you for making time today.
Good afternoon, Devin.
Well, the Bank of Korea's Consumer Price Index for March coming in at about 105.5. That's up 1% from a year ago. It seems the coronavirus should have had some impact on prices. Not a big movement there. What's going on?
In last year, we had one of the lowest inflation in history of 0.4% on annual basis. And the low inflation is related to recessionary state of economy in last year. So this year's over 1% inflation in 3 straight months is something unexpected because we are still under a stronger recessionary state of economy. But if we take a look at components of inflation, as people stay longer at home, livestock products prices and processed food prices increase in a larger scale. But automobile price and flour prices decrease in larger scales too. So in this all mixture, we ended with over 1% inflation over 3 straight months.
Yeah, a lot of cooking at home would help explain that rise in food prices. But now overnight on Wall Street, we saw the Dow. It was down about 4.5%. Korean stocks are still volatile as well. What's the story in the markets today?
The rapid spread of coronavirus in the U.S. dropped U.S. market yesterday, even with President Trump, a very strong $2 trillion emergency fiscal package. S&P 500 decreased by 4.4% in a single day yesterday, and other European markets also altogether dropped yesterday. However, in Seoul today, Kospi increased by 2.3%, and Kosdaq increased 2.9% in a single day. In today's Seoul's market, domestic investors bought stocks, but foreigners are selling Korean stocks. I think Korean government's imminent disaster relief paid to 40 million households became the savior of the market today.
Interesting. Well, also here in Korea, the BOK started its repo program, having said it'll supply unlimited liquidity. The repo rate only slightly higher than the base rate. The BOK says it will not go below the base. How did the first auction go, and what do you think the policy needs to be there?
Even though the supply of the repo was not as large as expected, Bank of Korea successfully purchased all repos in the market up to 5.25 trillion won size very successfully. And as we saw from previous report, Bank of Korea is going to buy all repos in the market on every Tuesday. And this unlimited supply of money, or actually quantitative easing, is something unprecedented in Korea, even in 2008 global financial crisis. So Bank of Korea will pursue this unlimited quantitative easing or credit supply as the economic situation gets better.
Yeah, and the repo program is one of just so many programs the government is engaged in right now. Another one of which is President Moon deciding to give a payment of up to 1 million won to all households whose income is in the 70th percentile or below. 1 million won would be around $900 some. Now, he's expressed concerns about doing that, but what made him go ahead and do it?
That's simply because domestic consumption is declining quickly, and domestic consumption is the largest part of the GDP because it covers about 50% of total GDP. But that largest part of the GDP or consumption decreased by 6.6% in February. I think as time goes by, the decrease of consumption will be accelerated if government doesn't do anything about the declining consumption. So this disaster relief program is also indirectly support and revive small businesses and self-employed workers, along with stimulating domestic consumption.
Indeed, that's the hope. But now, on another note, we see oil prices still incredibly low, possibly going lower, around $20 a barrel. They're both supply and demand pressures keeping it down. Where do you see oil going?
Oil price is declining without bottom, actually, down to $20 per barrel level. I think the two major powers are dominating global oil market. The first is coronavirus outbreak is weakening demand for oil because we produce less goods and services, and we need less energy oil. The second is kind of related to political issue. Saudi Arabia and Russia are competing for gaining hegemony in global oil market, and they decide to increase oil production. So that's another power to decrease oil price in the market.
All right, Professor Kim, we'll keep an eye on that. Have to leave it there for today, though. Thanks for coming on and sharing your insights.
Thank you very much.